Chief Strategy Officer крупнейших компаний Соединенных Штатов в IT-сфере. Seth Elliot, прошу на сцену. Welcome.
Okay. So today I'm going to try and keep this as smooth as possible. I know we're a little tight on time. What we're going to walk through are the pieces of a pitch deck that you're going to want to use if you're a startup sitting in front of an investor to raise money. And when you think about a pitch deck, the first thing that you should really start considering is, what's the goal of actually presenting to this investor? Is the goal that you think that you're going to sit down, walk through a pitch deck, and immediately get a check back? Which is usually not the case. So when you think about a pitch deck, what you want to consider is your goal with a pitch deck is to sit in front of an investor, go through a presentation so that you interest them enough to engage in a dialogue that will lead to an investment. And that's quite important from a perspective standpoint. What you want to do is start with your team. This is probably something you heard earlier today if you were here for John's presentation. It's a little bit of a truism in America. Investors invest in management teams. They don't invest in ideas. They don't even necessarily invest in products. They invest in a set of individuals that they believe can execute and achieve return. So an investor cares probably, for technology startups, about three things when it comes to a team. They care about your technology expertise in terms of development. They care about domain expertise, so a subject matter. If you are engaged in a travel startup, they probably care about whether you have some sort of background as part of your team in the hospitality field, as an example. And the third thing that they often care about, if it applies, is whether you have some form of entrepreneurial background. Have you engaged in the process of starting a company successfully before? Have you engaged in the process of starting a company and failed before? That's actually a positive sign for many investors, as long as you have some form of entrepreneurial background. When you do put up your team slide, you want to have some sort of photo on there. You want to have a photo more like the one that says Rick Marini, who was a successful entrepreneur. Neil Moricha is also a successful entrepreneur. But you don't want to have a body shot, you just want to have a basic headshot on your slide. And what you want to do is you want to make sure that your descriptors actually mean something. So that's me, right? And those three descriptors are actually not very useful to an investor. If I sit in front of an investor with a pitch deck and talk about the founder of a company that says Chief Strategy Officer of a company they've never heard of, Vice President of a company they've never heard of, and my academic credentials, it's not of a great deal of interest to someone that wants to deploy funds. Instead, you want to try and create bullets that provide a story and narrative that give some sort of anchor for the investor to look at and say, there's some value there. So in this example, right, I talk about how many years I might have spent in regards to a startup as a founder or a board member. I talk about the fact that I'm the chief strategy officer of this company and how I was recruited perhaps by the investors to serve as a mobile activation company. And also what I did at Fastball. And the point that I make there is you want to be sure that you have some sort of narrative that explains to the investors one of those three, if not more than one of those 3 points. Is there an entrepreneurial background? Is there a technology development background? Is there some sort of subject matter expertise? And add your LinkedIn URL for any of the team members that you put on your slide. If for any reason you're not already on LinkedIn, please make sure that you immediately create a LinkedIn profile and utilize it fairly extensively if you're looking to raise money. So once you've done that, once you've started with the team, you have to articulate to the investor what's the problem that you're actually addressing as a startup. And in America, there's a very common phrase in the venture capital industry, which is they're looking for a hair on fire problem. You're looking to find some sort of problem that you're seeking to solve where the customer set has a problem that's so dangerous for them that they literally have their hair on fire and they need to get it put out immediately. And you want to encapsulate that into some very basic taglines that are understandable to an investor. So here's some examples of companies in which they encapsulated the problem. So for PayPal, way back, paying for things online was scary and difficult. That's the problem set that they addressed. There's a company called Task. Task management takes too much time, and everyone has unique workflow. Bang, problem articulated for an investor. And this is a company that I happen to be involved with. Market research is broken. It's costly and ineffective. That's the problem set. And you want to try and encapsulate that problem set as succinctly as possible so that an investor can look at it and say, okay, great, I understand exactly what space the company is in. Also, it's quite important for you to recognize there's a difference between a desire and a pain point. So if we think about that, right, hair on fire is a pain point. If your hair is on fire, you probably need a fire extinguisher. However, the fact that you might want some sort of hair product to make your hair look better is a desire. It's not a pain. And be very clear about the difference of those things, and whenever possible, you want to be addressing a pain point. That's what a problem set is designed to be. However, with that being said, there is one exception to that rule that can sometimes be of importance to startups, especially if they're in the digital and social media space. So, on the one hand, you have acetaminophen, which is a painkiller, right? And on the other hand, you have methamphetamine, which is an addictive drug. Facebook, Twitter, World of Warcraft, to a certain degree, are addictive drugs. PayPal, Google, Salesforce.com are solving pain points. So if you can actually manage to articulate and build out a product that you believe can be demonstrated to be addictive in nature, then you don't necessarily have to solve a pain point. All you have to do is actually identify to an investor and persuade an investor that you can actually create something that will have people coming back in droves. Once you've actually identified that pain point, you actually have to tell an investor why it matters. So for example, if I could tell you that I've identified a particular pain point, the hair on fire problem, but only 2 people in the world have the hair on fire problem, an investor's not really very interested. So when we talk about this, we want to talk about the size of the problem, and you want a market opportunity that's large enough for an investor to care about. So you want to basically address the size of the market. Ideally, if you were looking at a global investment, you want to show a market in which the market size is over $1 billion annually. That may not necessarily be the case if you're trying to attack a regional problem first, but nonetheless, the larger the size of the market, and John made some reference to this when he was asked a question earlier today, the larger the size of the market, the more interested an investor is going to be. You want to be able to define that as much as possible. You want to define the size of the consumer set, the size of the user set, the number of customers, and you want to also be able to identify major market trends in the sector that you're playing in, with the core goal of trying to instill in the minds of the investor 2 things. One is that this is a multi-billion-dollar marketplace that you are looking to access, and also that you have done your homework and that you are an expert in the field. You always want to be in the position of having the investor think that you know more about your business and the market set that you're addressing than the investor possibly might. And remember, in many cases, you would be talking to an institutional investor, a venture capitalist who has a team of associates whose job it is to know these markets. So the more that you can demonstrate that you've got that data and that you've done that homework, the more comfortable an investor is going to be that you're actually the team that can address the problem that you've articulated. And another piece that's very critical for the most part is to address what's called TAM. It stands for Total Addressable Market. And that's the amount of dollars, as it says, that you could generate if you captured every potential actual customer that existed in your market space. It's not the same thing as saying, we address everyone. It's not the same thing as we address every Facebook user. It's actually specifically articulating what customers or consumer sets you could address, and then calculating what the value of that would be. So for example, let's say that there were $10 billion spent annually on suppressing hair on fire, and that your target customer, however, for the solution set that you deliver was small businesses with the hair on fire problem. And that generated $100,000 to, let's say, $40 million in top line sales. This is obviously an American example. Well, I can actually find fairly readily how many businesses there are in the United States that generate between $100,000 and $40 million of revenue every year. It happens to be that there's just over 4.6 million of such businesses. And I could then, for the sake of argument, pretend that they would spend $30 a month today on average on hair on fire suppression products. So I know I ran through that pretty quickly, but what you've now done is you've built the case for what your total addressable market is. Your total addressable market is not the $10 billion that is spent annually on hair on fire suppression products. Instead, your total addressable market is 4,685,049 customers times $30 a month, or $360 a year, and that results in a $1.6 billion annual market size. And total addressable market is something that many entrepreneurs pay no attention to, and if you spend the time to do that, it sends a message to an institutional investor that you know what it is that you're doing. So then you can articulate that in the following way. You could say that here's the total addressable market. It's a $1.6 billion market. And then you would then find some statistics about what that market growth looked like. Ideally, you want to find a market in which the annual growth is at a high percentage and it's growing as a percent of total market. Once you've gone through all that, you're actually finally ready to tell the investor what it is that you do. So you then say, listen, to address this big need that I've just shown you that exists in the marketplace, which is multi-billion dollars in nature, we've created something. Some super awesome mobile application or web portal, car combined with submarine, magic carpet, teleportation device, whatever it is that you actually have managed to create. And then, for the most part for technology startups, you want to show the investor what the solution looks like. You want to stop talking about it at this point and you want to actually demonstrate it. Because when it comes to certain items, showing is actually the key to getting an investor interested. I'm not going to spend too much time on the idea of demoing. Demoing itself should be a whole separate topic. I'm just going to give a few highlights. Ideally, you want to show a live demo. If you don't show a live demo, you want to show screenshots. Keep it to less than 5 minutes. If you cannot demonstrate how your product works in terms of the key features and benefits in less than 5 minutes, you're going to lose attention of the investor. If there's more than one of you doing this, one person should actually drive, i.e. run the slide projector or actually run the demo in terms of the mechanics of it, and one person should narrate. If you're doing it yourself, obviously you do both. You don't have to demonstrate every single piece of your product. I know it's amazing. Every investor understands that you think it's amazing. But all you need to do is identify the key differentiations, the features and benefits that make a difference in what you're delivering as a solution to address the big problem and the market that you've now articulated to the investor in the early part of your presentation. Try and use the demo to provoke an investor to think about it. If you get questions about your demo, that's great, because it means that you've engaged the investor. And focus on what you have today. That's the key to a demonstration. It doesn't matter to the investor so much at this phase what you might develop in the future. It doesn't matter that our future plans and our roadmap for technology development include these 27 different features in the future. What matters is show me what you have now, and then we can talk about what you might develop off of that as your foundation. And just as an idea, when you're talking through a demonstration, there's a big difference between something as you can see here where you say, well, one of our great features is you could tag the video, embed it on your blog, is much more of a passive approach as opposed to the other example, where you literally narrate in real time what you're doing. We're tagging the video that says cute cats, and now we're on myblog.com, embedding it, bang, finished, it's that simple. That kind of language provokes more activity than the former. From a hierarchy standpoint, live demos are best. Screenshots are next, and then if you don't have any other choice, you could show a video. It's very tempting for companies that are not in the US, that are presenting to US investors, for example, to try and create a video because it addresses issues of language and culture and you can polish it all up. The fact is that investors, for the most part, if you show them a video, kind of sit in the room and say to themselves, well, why don't you just email me the video? You're here to present, I want to see you do a demo or show me your screenshots. I think that's fairly self-explanatory. Do this until you are absolutely sick of it, both the demo, frankly, and the rest of your pitch deck. But do it until you can do it in your sleep. After this, you're now at a point where if you have any sort of traction in your business, now is the time where you articulate that to an investor. And traction equals momentum. It equals things that give an investor comfort that there's some level of proof of concept. The more the better, and hopefully you have some. If you don't have any, then you unfortunately would have to skip this section. Traction ideally is articulated via graphs. The more that you can visually represent this to an investor, the happier they are. One thing to think about from a hack, from a trick standpoint, is to tighten the x-axis on this graph in order to show traction that appears much more quick and rapid than it may actually be. So for example, if you formed the company in October, and now have 4,500 users, that might be the red graph. If, however, you say, okay, well, we started evaluating the space at the end of 2010, and in October, we quit our jobs, we decided to build the product out full time, and then we launched a closed beta. So we opened the beta in June, and now have 4,500 users. So that might be the blue line, right? Oh, well, we really only launched this product in June, and we already have 4,500 users, look how quickly we're growing. You can choose your axis to increase what the graphical representation of traction would look like. So if, for the sake of argument, you were converting at 3% average, Instead, you might actually look and see, well, what was our month-over-month or cycle-over-cycle conversion, and you would actually show that instead of talking about some sort of straight-line average conversion. And instead of saying, for example, well, we're doubling every 3 months, you can then turn it into, oh, we're doubling every cycle, and then therefore your cycle time looks much better, and your graph is much more sharpened to the right. So in terms of what traction means, there's also, of course, a hierarchy for that, and this is what a traction hierarchy generally looks like. If you have profitability, obviously that's ideal. Revenues are also pretty much right in line in terms of traction. And then after that, to a certain degree, there are a set of other elements that you would use to show from a metric standpoint to demonstrate proof of concept and traction to an investor. Engaged users of some sort is always a good metric. Registrations is similar to that. If you strike any key business development partnerships with large companies, that's a sign of traction. And to a certain degree, web traffic would be a sign of traction. Mobile downloads would actually fall under, for example, registrations or engaged users. Press mentions does not qualify as traction. And unfortunately, testimonials from customers themselves are not traction either. What an investor cares about is if you have customers, you should be generating revenues, and all I need to see is that revenue line item. After you've demonstrated traction, an investor is going to want to know how it is that you're going to basically go to market. And go to market for the most part means how are you going to distribute this, how are you going to acquire users, whatever your business model is, how are you going to get people involved, especially if you're a consumer-oriented startup. For the most part, this doesn't apply quite as strongly to business startups, but there you still have to talk about how you're going to acquire customers. They're going to want to know about your current customer acquisition channels, how scalable that is, how rapidly can you grow that, can you grow it at a large level, and what your future channel plans are. And again, why are you going to choose these channels, well, distribution or customer acquisition, and are they scalable in nature? At the end of the day, anytime you can show an investor numbers, that's what makes the difference. So for user acquisition strategy, you would want something like this. You'd want to focus for the most part as well on customer acquisition costs. Customer acquisition costs, again, tells an investor that you know what you're doing. It tells them, I understand that you're looking for a return. There are certain elements you as an investor care about. I know what those are. And one of them is, what does it cost me as a business to actually get a customer in the door? So whatever your elements are to acquire a customer, demonstrate those, even if you're not sure right now. If instead of actually having traction in the marketplace, you think, okay, here's how we're going to acquire customers. We're going to do digital display ads and mobile ads. Well, then you say, okay, here's what our CPM costs are. It maybe is going to cost me $5 CPMs, I think we're going to convert X percent, so it turns out that I can acquire a registration or a customer for X dollars. In this example, obviously, as silly as it is, you see $5.99 to buy bamboo plus $10.99 to buy a net equals $16.98 per encaged panda bear. One user acquisition strategy that we hear a lot in the US is viral adoption. If you're not familiar with this, obviously it's when something spreads like wildfire. Gangnam Style, for example, achieving 1 billion views on YouTube is a viral video. Two things about this that are important. Viral does not equal word of mouth. Word of mouth is different. Viral has actually a calculative effect associated with it. And there's something called the viral coefficient. And a viral coefficient is equal to the following. It's I times the conversion percentage. And I equals the number of shares. So if you tell an investor that we have a viral strategy and we're going to get a whole bunch of social shares, what you have to demonstrate to them is that you have the ability to see X number of shares and the conversion off of those shares in the social marketplace is equal to some Y percentage. And if I times that percentage is greater than 1, you actually have something that is viral in nature. So if you don't have such a calculation, then you actually cannot tell an investor effectively that you have a viral strategy. Instead, you could just tell them we have a very strong social sharing word-of-mouth strategy. If you can demonstrate this, and even if you can't, again, if you can't demonstrate this, but you can show an investor that you know about this math, it just, again, establishes you as having done your homework. And then, of course, your business model. You haven't spoken about it yet. We've instead talked about what it costs to acquire a customer. Now you're going to tell an investor how it is that you generate dollars. Is it a transactional model or recurring model? I'm not going to go through all of these in detail, but you can see there are various elements in terms of what a business model consists of. It's your job to articulate that, again, succinctly to an investor. Just nice and simple. We have a transactional model, it consists of X. We have a recurring model that's advertising or subscription-based. We're going to skip that. Competition, it's oftentimes skipped by startups. They're either afraid of actually showing competition, or more often they just simply haven't done the research in the marketplace to know what the competitive landscape looks like. One thing that you should start by understanding is never, ever tell an investor that there is no competition. It is the surest sign to get an investor to stop paying attention to you. Because either it means that you're lying to them, or it means that you haven't done your homework. No investor believes that there's a market opportunity that exists out there in the multi-billion-dollar field where you don't have competitors of some sort. There are two kind of primary ways that you can show what competition looks like. One is what we call the check chart. You put your startup on one hand, you put a couple of the competitors down the road, and then you put a set of features or benefits down the side, indicating, of course, that you have all of these, and your competitors only have some of them. A little more advanced is something called the 2x2, where you create a matrix that has an XY axis with key features or elements that are important in the marketplace, and then you place the competition on there in the appropriate sectors, and you put your startup on there as well. Whatever you choose to do, the important thing is to understand that you have to articulate to the investor actively and overtly why the elements matter. You could write a feature set of 27 different features, show that you have all of them, and that your competitors have none, and that still doesn't necessarily mean anything to the investor. I want to know as an investor, well, why are those features important in the market? Why is this big problem that you've articulated that's a big pain point for investors, for your customer base? Why does that matter that you've shown me these 27 features? So whatever it is that you choose to surface, show why it matters, and also what you've done to confirm and validate that those elements are important when you're doing your competitive analysis. And then finally, you come to a financial overview. You need to talk about what it is that you're asking for. In almost every presentation that we see, I'd say 80% of the time, I don't see an ask. So you want to put an ask in there. We are looking for $500,000 or $5 million or whatever that number is. Why are you looking for it? Talk about what you would use the money for. Is it product development? Is it primarily for marketing? Is it to acquire a sales team? Whatever it is you need those dollars for, the investor wants to know. To a certain degree, and this may be a little bit less applicable here, what's the structure? Is it a convertible note or a convertible preferred? Is it common stock? If you have had previous investment in the company, you want to surface that immediately, and you want to talk about who those previous investors were. Those are good validation points for a current investor. And if you have anyone committed to the round already, especially if you're doing a little angel round, you want to surface that right away. Ideally, of course, you want to find someone like John to invest $50 or $100 or $150,000 into your startup. And then you want to walk around to other potential investors and say, oh, well, I've got John committed for $150,000 under the following terms. That's an ideal way to raise money. A big question, which there is controversy on depending on who you ask, so just you just have to follow opinion, is do you present financials? So what I recommend is that you don't present financials, but you have financials ready. So you need to have your pro forma with all your assumptions built in, ready to go for an investor. But I recommend against using that in your pitch deck because it distracts from the rest of the presentation, and you can get bogged down in a very detailed discussion about your financial model. If an investor is interested in your financial model, generally that's a fairly good sign, and you can go to as much detail as necessary after you've gone through the other pieces of the presentation and the questions. So if this is done in the way that we've just discussed, what does a potential investor learn? They've learned that you have a killer team, hopefully, that has identified a really big pain or an addictive desire point in an extremely large market, that you've developed a fantastic solution for it, that hopefully is already gaining substantive traction. You've got a very exciting and sustainable plan to acquire customers that therefore is going to generate significant revenues per your business model, that's superior to the competition that exists out there, and already has, if all is really going well, interested funders. So by structuring your pitch deck this way, you can demonstrate to the investor that you know the things that matter to them, that you've addressed those elements, that you've demonstrated that you have an expertise in the market set that you're attacking, and you answer a whole host of their initial questions, and hopefully have gotten them interested enough to now have a dialogue with you, which will then lead to a discussion about how an investment might work. That's it. Now, any Q&A?
Раз. Можете задавать вопросы.
That was also utterly clear that you have.
I believe Seth just demonstrated a great example how to fit a 60-minute presentation into 40 minutes. And I believe that that is a good example. Like when you have limited time and you have to pitch something to an investor, you have to be ready. You have to cut and select the essentials which are important to really bring the information which is needed to make the decision.
I'm a little afraid that there are no questions whatsoever. I can't believe that it was that clear.
Hi. I'd like to have an answer on what was the worst experience of this sales pitch? Can you present like the worst case scenario or like the worst presentation of the startup you ever encountered?
You mean that someone that didn't follow this?
Yeah.
Yeah, so I mean...
like the contrary case.
There are too many examples for me to even come up with. I mean, the reality is I've seen, as I'm sure everyone that came from the US today, we've all seen entrepreneurs that have walked into a presentation. They didn't articulate what the market they were attacking was. They didn't talk about what the competition looked like. It was perhaps unclear what their actual product was. All of these things, pretty much, that I've articulated here, with a few exceptions, almost invariably can just be ignored or obfuscated. And that happens regularly in presentations. And that's a good thing for you as an entrepreneur if you're looking for money and you follow the kind of the guidelines, because it can help you stand out from the crowd.
Right, thanks.
Hey Seth.
Seriously?
What?
Go ahead.
So what is the personality mix and what kind of team do you want presenting? Is it a one-person team, multi-person team? What kind of skill sets do you want to blend in a pitch? What do you want to make sure you have? What are superfluous personalities that could detract from a pitch?
Sure. Yeah, no, that's a good point. I mean, first off, of course, it depends on what you have as your team. I will tell you that more and more in terms of investment from institutions and even from angels, and you can ask John what his opinion on this is, for example, they don't fund one-person teams. More and more often, investments now in the venture space are looking for at least 2 people on a team. Ideally, that team consists of a very strong technologist and a very strong, let's call it, business development / salesperson. Depending on what your team consists of and how many people are on it, when you do investor presentations, you probably want the CEO, and if the CEO is also a technologist, then you want whoever the business person is in the room, and for the most part, one person should present. And ideally, that's always the core founder or CEO. And really, you don't want to have more than 2 people in a room for the investor presentation. Anything else?
More questions?
Okay, so presentation is kind of the art, right? To present your product. You need to be an actor. What's happened in the situation when you have the brilliant team, but they really don't know how to present it in a nice manner, in a structured manner?
Sorry, the question is if you have a good team and they don't know how to present?
Yeah.
Practice. I mean, the short answer is practice, is to follow these guidelines and then practice and sit with advisors, mentors, colleagues, and practice the process and get them to give you feedback about how you're presenting. Part one is, even if you think that there is not a strong presentation capability, first get this pitch deck down. Forget about the actual presentation. Get the actual pitch deck completed. The process of having to go through this and completing this pitch deck will help focus the mind. And after you do that, then practice the pitch deck. And I think you'll find that there was a massive improvement, even for people that you think don't normally present well, and then go to colleagues, mentors, friends, etc., and get them to give you feedback about how you're presenting and to question some of your assumptions and commentaries.
Okay, thank you. Second question, do you have any examples from the, local market or Eastern European market who succeed in this strategy?
I don't have any Eastern European examples that come to my mind. I haven't seen pitches from Eastern Europe to me before, so I don't really have that for you.
Thank you.
I also have a question.
Yes.
So if you hear a brilliant presentation, you probably think that, yes, this is exactly what I would expect from a brilliant team also to do. But is it always the case when the brilliant presentation really equals to brilliant idea and very qualitative team, or not always. So people can practice in presentation and may succeed it, but does it always correlate?
Right. So first off, the truism is that, and I think John articulated this earlier as well, a strong team with a mediocre idea is more likely to get funded than a mediocre team with a strong idea. So
the content is not the key.
the content's important, but remember what your purpose is with this pitch deck. The purpose with this pitch deck is getting an investor interested enough to start dialoguing with you and basically entering into a due diligence phase because they're interested enough in the idea of funding you. If you don't have a strong product and a strong market, and if the things that you present turn out not to be correct, if you're making things up, or if you're incorrect about your assumptions or your research, investors will find that out, and you're unlikely to get funded. But if you can present strongly, you've got a leg up on everyone else that's presenting. The answer, of course, is that it depends on the investor. There are investors that are going to say, really great presentation, we don't like that space. We don't invest in that space. And so you have to move on to the next investor. There are investors that can say, you know, you have a great team, you have a great product, it's not for us right now because we have already invested in a competitive product. So there are lots of reasons why an investor might say, I'm not even interested in going to the next phase. But your job as an entrepreneur that's seeking funding is to control what you can control. And you can control how you give a pitch deck. So what you want to do is eliminate as much as possible reasons for an investor to say no. One big reason for an investor to say no is if you don't have a proper presentation. So you need to just kind of check that off immediately in order to try and advance to the next phase.
I have a question. Is it really important that the presenter who actually makes the pitch would be very confident about what he's presenting, about very persuaded about he will be a success, that he'll reach his goals, or it is more about figures, more about forecast, about profit, and stuff like that?
So to a certain degree, it's a combination of those two things, right? Again, the idea here is demonstrating to the investor that you have a knowledge base, that you have an expertise, that you've done your homework. An investor basically, especially at an institutional level, which is, when I say institutional, just to be clear, we mean venture capitalists for the most part, and similar type investors. The way those processes work is there's an associate that sits in a room and basically finds reasons why they should say no to a deal. So your job as an entrepreneur when you're seeking funding is to eliminate any of the reasons why people say no. One of the ways to do that is to follow this process. And to your point, you need to have a combination of confidence, but more importantly, that confidence needs to arise because you've done your homework. And if you're not the best presenter in the world, this is not necessarily about being a great public speaker. Especially investors on the technology side understand that you may not be the best public speaker and that you may be nervous making a presentation. They account for that. That's okay. What they care about, though, is that you follow a certain level of process that demonstrates you've done the work and that you have actually been able to demonstrate to them that you are an expert in the market that you're attacking. Because I don't want, as an investor, I don't want to invest in you if I'm not confident that you're the team that can execute and get it done. And one of the ways that I know that is that you demonstrate to me that you know the market space. So it is a combination of both, but at the bottom line, it's showing that you have that baseline, not necessarily how well you present it.
Thank you for the presentation. I'm sure that now the startups will put their best effort into designing a brilliant presentation. But the question is, how are they going to validate it and get the feedback? So do you have any ideas of how our Belarusian startups could reach out to a community of real investors, just receive their feedback and just to process further?
So that's a much bigger topic, obviously, which is how do you access a broader investment community, which is well beyond the scope of what I was presenting to you today. I will tell you that what you can think about doing is events like these, where you then have a very specific set of individuals in a room that can give feedback both on a crowded basis, in terms of all the other individuals that are startups, and hopefully some experts in the room where you can provide pitching and get feedback from them. We did a little bit of that last night at the Startup Mixer, and I would just, if anyone was there, if you think about the process that we went through here today, and you think about what some of those pitches look like, I think you can already see a way to make that improvement. Obviously, last night's pitches were in a very different kind of method. They were designed to be done in 5 minutes. The kind of pitch I'm talking about here, no one asked about it, but in general, you should be thinking about a 15 to 20 minute total pitch slot in terms of your time frame. And then if you can do a very strong 15 to 20 minute pitch, you can cut it to 5 minutes once you know your 15 to 20 minute pitch. And one of the answers to you then is to bring in other experts, to find any investors that are in the community and ask them to come give feedback, to give it from colleagues and from other companies. The key in those kind of circumstances, if you do have any sort of investment community to get them to participate, is to obviously ask them to come, not because you're asking them to write checks, because you're actually asking them for feedback in order to improve the process of going through a pitch deck. And that's one of the ways that other communities have done that.
Got two questions if you don't mind. The first one is, have you ever been, is it your first time to Europe? And the second one is, okay, for the US market, you know the problems, you know the data, right? You know which problems the startup is solving. You can check this, check it out, like hire an agency at least, right? The data is like just transparent. But suppose the startup, like suppose my startup is solving some problem in Belarus which you have no idea about, and like the language barrier is there, and the lack of the data, and lack of this analytics and everything. How you know this is a problem, and how you know any problem is getting addressed?
So that's, let's start with your second question. That's a really good question. Why are you trying to solve that problem?
Sorry?
Why are you trying to solve that problem? Whatever that problem is that you're telling me that you don't know what the data set is in regards to how big it is, why are you actually even trying to provide a solution to it?
Yeah. My question, how...
No, I understand.
Yeah.
So my point to you is that if you're not sure how big that problem is, then...
I'm damn sure, and the whole team is like very confident like this. But how you know, like...
How are you sure that the problem is a large one?
Because I got some data.
So you have some data?
Yeah.
So that's the data that you then need to use as the baseline in your presentation to an investor. That says, look, here's how we know that this problem exists. Here's how we know that this problem is large. If the data that you have and the data that you can find doesn't suggest that that problem is large, you need to either spend more time gathering that data, or maybe the problem doesn't exist. Now, I'm not trying to make light of it, and believe me, it's not necessarily the easiest thing to find data even in the US for the market that you're attacking. One of the ways to do that, if you're absolutely certain that there's a problem and you can't find relevant data, is to do primary research. Call companies. Call large companies that you think have the problem and ask them to do interviews. And then present those interviews in a format to investors saying, listen, we've polled 15 large companies and they say that they all have this kind of problem and this is the kind of spend that they would have on it. So by extrapolation, it looks like our market size looks like X. There's always a way to find some level of data to answer that question. And if you can't find some level of data to answer that question, you should be asking yourself why you're actually trying to solve that problem. Because certainly an investor will ask that. And what was the first question?
Have you been to Europe previously?
Have I what?
Is it your first time to Europe?
No, I've lived in Europe 3 times. It's my first time in the Russian area, though.
The nature of the question was, like you have more data about the US market than about the European and the local market.
Yeah, I can't speak to Belarus and the Russian market. I can tell you that certainly data throughout the world is much more readily available than you might think. I mean, we've seen data points out of countries throughout Latin and South America. I've seen data points for companies that were attacking problems in Africa. So again, it's a matter of finding what it is that the problems that you're attacking and articulating some measure how large it is. And if you're only attacking the market set here in Belarus, as you heard from John earlier today, maybe your market that you're attacking is too small and you may need to expand beyond that.
Right, and then an additional question, like the third one. Okay, maybe I should not ask. Thank you very much.
Sure.
Hello. Thank you for questions. The last question, okay?
I have a small question. Is it impossible for you who makes a presentation? I mean, it can be a person from the street who is a great presentator, yeah? And on another side, it can be an executive manager or owner of the idea who can present the idea for you. So, ideally, who will be better? Who is a better presenter to you?
The ideal presenter are the founders of the company. So usually you have founding teams that are anywhere between 1 and 4 or perhaps 5 people in terms of the core original founders. When that's the case, if it's one person, it's pretty clear who presents, right? If it's 2 people, both of those individuals should present. After your founding team is more than 2 people, then what you really want is whoever the primary executive officer is and whoever the primary technology developer is for a tech startup. Those are the 2 people that you would want in the room. Does that answer the question?
Actually, yes, just to confirm. So, if we have a great presenter who actually knows nothing about this business and so on, he's a presenter only. On the other hand...
Okay, no, sorry, now I understand. You would never want to do that. You don't want to go get someone that's not one of the founders and executive officers of your company to be a presenter. And presumably, a founder or executive officer of your company better know about the business. If they don't know about the business, clearly there's a problem. So you don't find someone from outside, you don't go get some sort of professional presenter to sit in front of an investor and go through your pitch deck. Does that answer you?
I see. Thank you.
Okay, great. Thanks very much.